Well, today it's not my ass that's bothering me. Now it's just something normal. What's up? I would, I'd show you the other video, but it's just my face being sucked from my skull. I was doing a nice video with some nice song called Book of Rules by the Heptones, explaining some of the rules to day trading. If you're new to the program, I like to actually enlighten people on what they should be doing. We all have learned over the last couple of years that fundamentals is just when you analyze what a company does and their prospects for the future and how to gauge whether or not their stock price is worth it, that you might want to invest in the company. And that's how you so-called MBAs and your analysts do it. We obviously know where that's gotten everybody. So then we have technical analysis, is when you look at charts. And a chart, basically, it's a self-fulfilling prophecy. If everyone's looking at the same chart, everyone has the same moving averages. Obviously, there's 5 trillion ways of tweaking each different aspect of the chart. You Bollinger Bands, your candlesticks, you're dipping this, you're following that. The bottom line is, I don't care about most of that, because from 9:30 to 10 o'clock, stocks are doing things that no chart, volume indicator, there's nothing out there. I know you're gonna argue with me, but hear me out. What I'm going to tell you is that there's rules that do work, and yeah, they're based on charting in a sense, but I'm not looking at the chart. When I see a stock like U.S. Steel gapped up, okay, when I see a stock like, well, basically when I see anything gapped up, I'm looking for the fade. The market likes to close the gaps of where the stock came from. Now, X was doing all right for a couple of days, and it hit some resistance, and then it got pounded. So it's been in a couple of day downtrend. So when they gapped it up, and there was no news out there, you got to look for this thing to fade. So it opens up at 2190, quickly has a little pop, but then starts to reverse. I don't need to see a chart to know that if it breaks 2190, the opening price, I'm getting short the stock. Got short 2190, wanted to make the video, talk about playing the fade, covered it, stock falls another 70 cents after I get out. That's why this program is going to be phenomenal when I'm doing shit live. Because, well, you know what, the thing is, if I am live and I'm carefully talking about each trade that I'm in, maybe that'll make me more patient. That's what I'm kind of hoping for. So then my entries, which are always good, will make even more money for all of us. But again, the trend of just getting into a position, when I get out of it, it's gold. It's gold, Jerry. So then I was going to talk about Hartford Financial, because we were thinking about maybe piecing into that stock again on this pullback. And I said, no, it's plummeting. Let's make sure we don't want to buy it before 7.5. I base a lot of things on strike price and whole number, half number. Agree with it. If you don't, then I can't tell you anything, but I've been doing this for 12 years. Stocks are attracted to strike prices and whole numbers and half numbers. It's not about charts. It's not about anything. That's about intraday trading. There's nothing to do with anything. But rule number 675. When you see, oh, by the way, this is going for you people who think you could trade news. Oh, Hartford, their credit rating got downgraded. I better short that stock. Yeah, you know what? Maybe you made some money. But maybe you walked away from the desk, and next thing you know, the stock is running like a beast. Myself, basing everything on the absolute lunacy, absurdity, and just assuming the market's trying to get you and kill you, I figured Hartford Financial would be going up today. Oh, would you look at that? So there, it started to make a little bit of an up move, and I'm not thinking in the back of my head that it's going to go green. I'm thinking there might be a squeeze in there somewhere, because we've seen companies with credit ratings being downgraded, stock gone up. We've seen it all. It doesn't matter what the news is anymore. We've seen it all. So I just have to base my analysis on that the market is going to kill these people who are shorting the stock today. So I'm just looking to play a little bounce. Boom. I'm in at 675. My whole number, 7. I'm thinking, I'll get out at 7. And would you look at this? The stock's only 8 cents away from going positive. And I'm sitting there trying to do the video as I'm trading, doing the video, talking about, well, there's no reason to own Hartford Financial. They're probably going out of business. Their credit rating is getting downgraded. There's nothing good on the horizon for them. That's a good time for you to buy the stock. And as stupid and ridiculous as that sounds, the stock has just crossed 771, and now it's 775. And you ask me why? Why was I looking to get into Hartford Financial? Doesn't make any sense. But as a seasoned trader, I've seen all this. I know the stupidity and the nonsense that the market does. These are things that you can't learn from reading books. These are things you can't learn from doing your charts and all your bear flag, inversing strategy, backtesting bullshit. All right? That's why you sit with me, and once we're live, you're going to be hearing the ins and outs of how and why this stuff happens, and the absurd, however ridiculous you think the concept is. If it works, what do you care? I'm going to bring you things that work. I might not even know how to explain it. Holy crap, how did that work? Can you break it down so I can learn at home? No, you can't. You can't learn at home. I'm sorry. As much as I want to be a teacher, there are things that you're never going to learn until you're doing this for years. And you can sense it. You can feel it. Okay? Now, a lot of people want to, all these guys out there, these traders expos and all these websites, and I've been surfing the web for like a good 3 or 4 months trying to find people who want to collaborate with me, maybe some cross merchandising or whatever. And there's so many guys out there showing you how their system is going to make you money, and how their certain way of looking at a chart is going to isolate ideas for you. Bullshit. Okay? Because they're all saying that there's some sort of chart formation and volume, stochastic Bollinger Band. Nobody talks about, I mean, granted, I can't say nobody. I don't want to use these extreme terms as Hig is just waiting to just bust out of here. It's, man, there's things that you just have to know. There's no explaining it. It's a gut thing. Now, if I told you that I'm going to show you how to make money just based on my gut instinct, okay, a lot of people wouldn't subscribe to that. Of course, you wouldn't want to pay for that. Oh, he's just using his gut? Oh, that's just, you might as well just throw dartboards. No, that's incorrect. If you have somebody that has a 10-year track record using his gut, granted, the only reason I lost most of my fortune was because I went against my gut. Back when Lucent was falling apart. Back when some of these semiconductor stocks that I thought were valued correctly, obviously I was incorrect about that. Talking about fundamentals ruined me. Because when you look at the fundamentals, you don't know what these companies are actually talking about. Do you think you can trust a CEO? No. So what you're looking at when you're looking at fundamentals, unless you are the independent auditor of the company who's getting the books that day, you don't know exactly what's going on. You think you know what's going on from reading Yahoo Finance and looking at the balance sheet? Come on now. Most of the times when you made money investing was because of your gut. You liked the product. You bought the stock of that product and it did well. You saw something that made sense. You read an article about how a company was improving something, so you bought the stock and it did well. It's not about looking at these balance sheets. Come on now. When I was telling you guys to buy Ruger and Smith & Wesson, why was that? The world was coming to an end. Everybody was in a panic. People thought they were just going to be firebombing in the street. You might as well own gun stocks. And you know what happened? We made 100% on our money. Simple as that. Sometimes it works. As simple as that. So when Hartford Financial, all the news was negative, and as soon as it starts going green, all those people who thought they could trade on the news start covering their shorts. Buying begets buying. Next thing you know, the stock pops. We make money. So, like I said, So many things, so many ways to make money. It's ridiculous. You just hang out with me, and through the frustration and all the absurdity, we're going to find things. And we're going to find things on a daily basis. It's just stupid already. Stupid.